Like, at what age did you kind of realize, like, hey, look, there's potential here?
I didn't realize I kind of had potential with it until my senior year in high school. And that's when I had sponsors that started putting photos of me in magazines. And at that point, when I had my first photo, I was like, crap, maybe I can do this.
Are sellers usually okay with a longer escrow, like a year escrow in that case? Or
I would say most sellers, no, they don't want to do that. But a lot of times we'll find we just closed on a project. It was owned by the bank, and the bank, they had a hard time getting rid of it.
What about struggles, Mikey? I know that we haven't really talked about that.
Pick your poison, because the struggle will always be there.
Hi, everybody. Welcome back. This is Jose Luis Morales. Welcome back to the Morales Group Show. This is episode number 94. Today, we've got a very special guest, a local here out of Ventura County, Mikey Taylor. He was a professional skateboarder and now real estate investor, manages right about 200 or slightly under $200 million worth of real estate. Mikey, welcome to the show.
Thanks for having me. Pleasure.
Yeah, I'm excited about this one just because I normally get to talk to a lot of people that own a lot of real estate in different parts of the country, but it's a little bit more rare to find somebody here local, especially with the type of background. Let's just start off with who is Mikey Taylor, and then let's talk a little bit about your skateboarding career right before we transition to real estate.
Gosh, I would say first and foremost, I'm a husband and father. My first career was in skateboarding. I was a pro skateboarder for about 15 years. From there, I made my way into the beer industry, started a craft brewery with two of my friends down in San Diego called St. Archer. We ended up selling that company in 2015. And then from there, my next business was in real estate. It's called Commune Capital. And we run three different portfolios, one in multifamily, one in storage, one in lending. I feel like I have this mission to not only find great investments, but also educate people on how to get money into investments so that they can have freedom, at an earlier age.
I feel like we had the same life purpose. That's my life purpose as well, too. I feel that by educating people, they can make better decisions to help them reach that freedom.
That's right.
One of the decisions that you made very early on was, or you became a professional skateboarder. I know that's not an easy task to be a professional at anything. Like, at what age did you kind of realize, like, hey, look, there's potential here? And what was the work ethic like to actually get it or make it to what I call the big leagues?
The unique part about skateboarding is it's so hard to learn, especially in the beginning, that most people don't make it past the first year. Mm-hmm. And I say that with this. The first trick that we learn as skateboarders is an ollie. That's where you jump and the board sticks with you, right? I tried that every single day for 4 hours a day for 6 months until I did it one time, right? Most people don't have the patience to fail that much. So what's cool about skateboarding is because barrier to entry is so challenging, it weeds out a lot of the people that aren't willing to put in the time. Mm-hmm. So I made it past that first point of being able to learn how to ollie. Then from there, gosh, I would skate before school. I'd skate on my lunch break. I'd skate after school. I'd have dinner, do homework, skate in the garage. Every second I could, I was skateboarding. And that way, at first, was just to master the craft. Mm-hmm. I didn't realize I kind of had potential with it until my senior year in high school. And that's when I had sponsors that started putting photos of me in magazines. And at that point, when I had my first photo, I was like, crap, maybe I can do this. And then once I became pro, my whole philosophy was just outdo everybody. It was, how much is everyone else doing? How can I do more? And I just felt like if I could build something that outperformed everyone and then it was sustainable to go the distance, then that would be my metric to success. It worked well for me. The challenge is, though, I had to sacrifice a lot for that. You can't skateboard 6 hours a day for 25 years and still do a lot of the other things that, maybe some of my peers or friends were doing. So it came at a cost, but to me, the cost was worth it.
Sometimes people don't understand, like, when they reach your level of success, how much sacrifice it actually takes to get to that level. What would you say was the driving factor for you that early on? Because, I mean, most of the time when people are like 18, they're kind of thinking about girls probably,
Yeah.
So like, what would you say would be something that was motivating for you? Or
the one thing that really helped me is when I was skateboarding, it was so long ago, skating wasn't cool. So none of the girls liked us. We were like lame. So that helped. For me, the motivation really was, I think, the love and obsession I had for skateboarding and not wanting it to end. And when I started getting to the point of needing a job, my alternative to not getting a job was to convince companies to give me money. Then it just became a solution to the problem. If I skate more and become better and put more demand on my name, then I get to skate longer because I'll make more money from my sponsors. So I was motivated by not wanting to stop skateboarding.
Do skateboarders make most of their money from winning competitions, or is it mainly from sponsorships? And this doesn't have to be the salary for you, but maybe just like a broad range of what the salaries typically range, just so that our viewers kind of get somewhat of an idea.
So most people make their money from sponsors. So sponsors will pay them to exclusively wear their product, and you can have one sponsor per category. So you could have a shoe sponsor, a clothing sponsor, a skateboard sponsor, etc. For those that skate contests that win, that's money on top. So that's great. Most people don't make their money from contests. I would say the average annual income for a pro skateboarder is probably, between 50 and 80 grand. It's not that much. You have a small group that makes six figures, and then you have a very, very, very small group around $1 million a year, but it's small, very small.
So it's not like a professional football player or anything like that type of money.
No, for most, I would say for 99.9% of pro skateboarders, we have to do something the second our career ends. Next day, we have to do something.
How old were you when you bought your first property?
22.
Good for you, man.
Yeah. So that was my first experience in real estate. And then shortly after that came storage.
You bought a storage unit after that.
Yeah, I started investing in storage. When was the year I got into storage? Over a decade ago. It wasn't long after I first entered in. My challenge was having enough money to invest in stuff like this, though, especially on a skater's salary. It wasn't a lot. So I had to live like I was broke for a long time just to have the money to be able to put in.
You mind telling us a little bit about your first property? How did you find it? Maybe how did you fund it as well too? And if you still own that property, or what was the exit like?
Yeah. So my entry into almost all investing was done passively. I was looking, especially at that time with storage, I was investing in a group that were friends of mine. And they were the operators. They would find the deals, they would go raise capital, and then I would invest in their projects. The good thing about it for me at that time was, one, I didn't have the $3 million check to put down on these projects. So I was able to get in investing 25, 50 grand, 100 grand. That was one. Two, all of my focus was able to go towards my career. My career was, one, what I wanted to do, and two, was my greatest source of income. So I wanted all my attention going towards my earned income. And then I wanted to put my passive income to work, and I wanted to do it with groups that understood more than I did. And then the third blessing to it was I got to learn through them, right? Like when you're a passive investor, if you're paying attention, you get to see all of the pro formas. You get to see your quarterly report, how it's going. You get your audited annual financials. So there was a lot of learning I was able to do that didn't come at the cost of me having to go out and actually learn it myself. So that was great. And then I ended up moving into an active role once my skateboarding career moved towards being over.
I feel like you were thinking ahead of your time as well too, like meaning at 22, 23, 24, investing passively so that you're focused on your primary source of income. Did you have somebody advising you at that age, or did you have somebody that had already done this, or like how did those thoughts even cross your mind at that age?
Yeah, I had a huge mentor in my life. And it came because when I told my parents I wasn't going to go to college and I was going to be a pro skateboarder, my parents panicked, said no for a long time, and I just wouldn't give up and finally convinced them to give me their blessing. But that came at the recommendation for me to get help, have somebody come into my life and help me build out a plan financially. At 19, I had somebody come into my life and we started working on the foundations, right? How do I create the discipline so that I could spend less than I make and then put that money into, in the beginning, it was basic, right? It was stocks, it was bonds, it was retirement plans. But I wasn't making that much, but just formulating the plan was really good for me. And then creating the discipline of getting used to money comes in, I put money towards investments before I spend, then I spend, and I just keep doing the process. Once I started making a little bit more, then it started getting interesting. What I knew is that I needed to figure out how to take control out of my sponsors' hands. That's the one thing I knew, right? All of my income came from my sponsors. And if they decided that they no longer wanted me, all of my income went away. That much I did know. What I did not know was how to take the control out of their hands and put it into mine. And that's where my mentor came in. And so we started looking for investments that captured a handful of things. One, I was young, so I wanted my money to grow. Two, I was going to need some type of cash flow when my career ended. And three, I was paying a shitload in taxes. So it was like, how do I bring down my tax bill and then also have some type of wealth build and cash flow? And real estate was a phenomenal vehicle for that. In the beginning, I wasn't investing in a lot of real estate in the beginning because I just didn't have access to. But once I did, I started shifting way more onto alternatives and less in, conventional stocks and bonds, et cetera.
It sounds like a great idea to have somebody kind of come in and kind of help you formulate a budget, live below your means, and then help you invest it. Is that somebody that like people can hire out? Or like if somebody wanted to find somebody like that in their life, like what would be the best way to kind of do that?
You have two options, right? You educate yourself or you hire the education. That's really it. For myself, I hired the education. I had somebody that I was paying and he helped me do all my financial planning. And then he helped me on the investment side as well in the beginning. You don't have to take that path. Right now, it's a really good time because you could go learn anything you want from your phone or your computer, right? The access is there. You just need to spend the time to learn it and then go do it. I would say it's more of a personality thing. There's certain people that are DIY. They want to do it all themselves. If that's their plan, then that's the path they go down. There's other people that are like, look, I want to focus on this. I want my money in order. I need some help. Then you might go towards like, full hiring it. And then there's a percentage that's a hybrid, right? They like doing it, but they do want somebody to just, call up, hey, can I get your opinion on this? What are your thoughts? And so it's more a function of what you're looking for. And yes, it's out there. That's absolute.
And sometimes it's really expensive to learn it on your own. What qualities would you recommend somebody, like if somebody is in a similar position as you were in, where you were making money, what quality should somebody look for in the mentor role?
Knowing what I know now, if I had to go back to that, what I would look for. One, I would want somebody to be financially free. I would not want somebody who just learned it on a piece of paper and then took that information and told me. I want somebody that went out and did it. I want to learn from them. Two, I want them to have good character and good morals. What is their family life like? What's their relationship with their kids like? How do they perform under stressful scenarios? What has their track record been? What did it look like post 2008, et cetera, stuff like that, right? Because as a mentor, I want to trust in his decision-making, but I don't want it to just be financial personally. Like I want him to make good decisions in general. And I don't want the mindset of you make a lot of money, but your marriage is trash. Your relationship with your kids is trash. That's not what I'm looking for, right? I actually hold that in high regard. The other thing I would say is just making sure they're transparent on the value that they're going to add to you and what the cost is for that value. When you start getting into like advisor land or mentors, a lot of times they just hit you with all these hidden fees. And then you're looking around going, what am I getting for all of this? So if you're interviewing somebody, I think a really important question to ask is, what can I expect for you to do? And what is the cost of that value? And then it makes it easier for you to go, you know what? I'm going to get that much planning. I'm going to get that much tax help. I'm going to get that. Yeah, that's worth it for me. Right. But you got to find somebody that's transparent. I think also to end it, finding somebody that holds the idea of putting the client or mentee first. When it comes to investing, there's not one size fits all strategy, right? It's very personal for what you're looking for. So just making sure that somebody's going, what are you looking for? And I'm going to help you to your best interest. I'm going to try to take myself out of it. I think that's really important as well.
Let's talk about the 3 different types of investments that you do now. What do those look like?
One of our portfolios is a lending portfolio. So we offer bridge debt for people that need short-term financing. We finance on commercial real estate. As an investor, why investors like lending is it's pure cash flow. It's monthly cash flow and it has a limited risk, right? You don't have your equity risk. So least risk, in my perspective, least return. We have on the opposite side of the spectrum, a big repurposing portfolio. So we look for big box retail that goes vacant, and then we fill the inside with storage units is our storage play. So we want to find something dead and we want to turn it into something of value and has a high premium on it. And then we have another portfolio that has the same strategy, but it's in multifamily. One of our current projects, we purchased 72-acre mall right outside of Cleveland, Ohio, and we are going to be scraping the mall and building apartments. It was a vacant mall. or a dying mall. So we look for ways to add value, and in doing so, we get to add return as well.
What is your role within the companies?
So I'm a founder, principal, and then I'm co-president. I have another president as well.
You mind me asking what a typical day for Mikey Taylor looks like now? Do you ever jump on the skateboard still, or is
No, the skateboard, if I step on a skateboard, it's maybe once every couple months. It's not as much as it used to be. My typical day, it does change depending on if we're raising money. If we're raising money for a project, it will look a little bit different. Pretty much I'm in the office typically around 9, and I'm going to usually be here till about 5. There's about 2 hours of my day that's spent towards creating content now, which is a little bit different. And then the rest of it is usually creating leads, pitching investment, follow up, going over, campaigns for the company, certain new projects we're doing, etc.
So you're not like the one underwriting the deals most of the time. Like there's probably somebody specifically in that role. You're not the one looking for the deals, more of relationship management with the investors and obviously like almost like the face of the company as well.
Yeah. Okay. So there are 2 things. We're a little bit over 400 investors. How I try to do business or create business, I want somebody that's overseeing each component of how the business works, right? So we have a COO, we have underwriters, we have asset managers, each component. I have somebody basically being the best at what they do. For me though, and why I say that, I am a people person. It's real easy for me to be around people, make my way into circles, drive excitement, etc. We get a lot of deals from brokers. Having a relationship with brokers just works well for me. So I'll get typically the deal, and then the deal gets passed off. And then we have somebody underwrite it. And then if it's of interest, we reach out, then we go through it, etc. But when it comes to being a people person or being a relationship person, brokers, that helps well with. It also helps well with investors. So I do more on finding investors than I do managing current investors.
Any tips that you would say? Because I know that most businesses don't have many employees. I don't know if you've ever read the book, The E-Myth. It's like typically they're the person raising the money, they're the person doing the paperwork. It's like one person doing everything.
Yes.
Do you have any tips on building a company where different people have different strengths?
That book is amazing. If anybody hasn't read that book, read it. It's really good. There's a few things to it. I would say, it begins with you. People don't tell you that it's actually hard to let go of control. I think it's a pretty easy concept to understand.
Yeah.
Like you can't build it yourself. You need people around you. So go hire people. Okay, fine. But like letting people succeed and letting people shine, and it sounds awful saying this, is actually hard to do. And it's on both sides, right? Like it's hard to let go of control for somebody to mess up, but it also is hard to let go of control for somebody to succeed. So you have to work on yourself to let that go and put people in place to do better than you, right? To take the credit. The other thing too is knowing more about your strengths and weaknesses is actually a really good thing to know, because typically we hire people that we like. And usually we're attracted to people that are similar to us. That doesn't do good with business. You want to hire people that are good at what you're not. So keep that in mind. And then the other thing is just hiring good people is actually challenging. It's not easy. Something we do, we take a lot of time before we hire somebody. If we take a first interview and we like them, it's going to be a handful of additional interviews. All of the partners are going to basically have a say in it. And we're trying to be real selective on who comes in. And then once they come in, if people aren't a good fit, try to move them on as fast as possible. Like hire slow, fire fast. It's a really good principle to live by. The hard part to what you're saying, this is to me the hardest thing about the whole thing, is how do you bring people on in the beginning when you don't have money to support the people coming in? That is by far the hardest part. What I've done that's done well, you have to have a mission that people can get behind, and they have to really believe in the mission, right? Because they're going to be taking a risk to come onto a company that isn't big. The other thing is try to incentivize them with either equity in the business or some type of revenue share where they can be paid on performance. From what I found though, when people feel like they're a part of the business, when you can give equity or shares to bring people in, you get a different type of energy out of people. It's what we're all doing. And you have this like, we'll bleed for this thing. So I'm actually a big believer in letting people come in as opposed to, I want to own the whole thing myself. And then once you get to the point where you have the revenue, then you hire it out.
There's also the other end to that. How much equity is good to give, like at the very beginning? Because obviously if you're going to build a 200 million or $1 billion company and you're giving away 70% of it, it takes away a little bit of the incentive. How much is too much, just out of curiosity?
It really, really depends to me. It really does. I'll give you the whole thing for me right now, right? I am not an ops person. Operational, not my strong point. So I have to find an ops guy right from the beginning. Have to. I put a lot of value on that because I can't succeed without them. So, knowing that I might be willing to give them more in the beginning, but you have to have the end in mind. That's something you kind of just touched on, right? Are you going to have to raise capital for your company? Are there going to be multiple rounds to raise capital for your company? And every time you do so, it is dilutive. So just keep the end in mind and how much you want to own at the end and be realistic with what the company is going to be worth, right? But I'm personally a believer of I'd rather own 10% of a $100 million company than 100% of nothing.
There's 3 portfolios that you have. I almost feel like those 3 portfolios were meant to serve different purposes for different investors. And I feel like it's very strategic. Why did you guys choose those 3 different types of portfolios? And what purpose would you say that each one of them serves?
So for our storage portfolio, the storage portfolio has been here for a long time. It's stabilized, it cash flows, there's a cash dividend that goes out every quarter. And so because you're coming into a portfolio that is already stabilized, there's a premium on that because there's less risk. So I would say the person who wants to participate in equity, that wants to come in on a diversified portfolio and still participate in future deals, storage is great for them. If you want like the least amount of risk and you just want to start living off cash flow, lending is a good option there. But then multifamily is our growth portfolio. That is like our newest one. That's where we target the biggest return, but there's also the greatest risk. So what we find from an investor is for the younger investors, if they're going to come into one offering, it's typically multifamily. If they're going to come into 2 offerings, it's typically multifamily and storage. And then as they get older, they then tend to start shifting towards storage and lending. And then as they get towards that later end, it typically goes all lending. And I think it's just the difference of when you're young, you're in wealth build. And when you get older, you're on, I want to live off cash flow and maintain my portfolio.
The lending doesn't provide tax incentives, right?
Nope. Lending is different than owning. You do not get the tax benefits. It's taxed as ordinary income, but you look at it as I'm going to lend up to, let's call it 65% of the building. So all that equity risk is gone. I'm first in line. I get my monthly check. So I think for that, it's less about tax efficiency for that investor. And it's more about eliminating risk and monthly cash flow.
You talked about taking retail buildings and turning them into storage. That sounds like it's a huge market right now because like with Amazon or some of these big online retail companies, it almost seems like every day I look, I see like Toys R Us gone, the Ventura Mall, that building doesn't seem like it's performing to its full capacity. Do you mind telling us a little bit of what that process looks like? Because it almost feels like it's perfect timing. And I've thought about that in my head. I'm like, it sounds like a great idea, but the implementation part is the part where I have no clue on how.
Yeah, it's awesome. It is. It's hard. But let's start with the timing part, right? So for us around 2017, 18, 19, it got really hard to find deals for us. Deal flow definitely slowed down. COVID hit. Deal flow ramped up. We're on like acquisition mode. So yes, I think timing is good as you see all of these big box retails being disrupted by a lot of things, right? COVID, Amazon for sure, just the consumer experience has changed. And so you're seeing opportunity. The challenge is cities don't like storage. They do not want it. So it's hard to find a deal. So it's hard to find the big box retail in an area that has demand for storage and then get the city to allow you to do it. That becomes the part that's hard.
I've ran into situations where I'm doing a laundromat in Oxnard. And originally the city, when we were buying the building, they're like, yeah, you can do this, you can do that. Made it seem really easy. 4 years later, we finally got permits. When you're taking that type of converting a mall to storage, like, how do you hedge against that risk?
We don't close on it until we get it green light. We don't want entitlement risk. So we'll be under contract for a long time as we work with the city to allow us to rezone it.
Are sellers usually okay with a longer escrow, like a year escrow in that case? Or
it depends. The answer is yes and no. It depends. I think this is the best way to say it. For our portfolio, if we close on 4 deals a year, that was a big year, right? 4 is nothing. really, that's a good year for us. And the reason is it's very hard to get everything to align to where this process actually makes sense. I would say most sellers, no, they don't want to do that. But a lot of times we'll find, we just closed on a project. It was owned by the bank, and the bank, they had a hard time getting rid of it. So it's like sometimes you can find these assets that are distressed and work with them along the process. But it takes time, dude. Definitely does.
In terms of deal flow, how does somebody start finding deal flow, and how do you know if it's actually a good deal?
So there's a couple different ways to do it. The way that I'm a big believer in is building relationships with brokers. I think that's actually solid. It's not easy to get through this process, and this is why. Brokers, remember how brokers make money. Brokers make money when somebody closes on a deal. And brokers have typically a circle of people that they know will close. So in the beginning, when you're going out to build these relationships, most likely you're not going to get anything for the first 12 months. You're not going to see deals because you're a variable and brokers look at you as risk. But in my perspective, if you know what you're talking about and you can build a relationship with them, so they start enjoying conversation with you, you start building that trust, you will get to a point where they will throw you a bone. And then once you do not F it up. And then once you close, it's insane. Once you close on one project, everything changes. Then all of a sudden deal flow comes at you like crazy, but you have to be educated, right? If you're going to be the one, right? You're going to be building the relationships with the brokers. You're going to be underwriting it. You need to know how to underwrite deals. You need to know how to get your financing. You're going to have to do it in a quick time frame. When you're doing your due diligence, don't ask dumb questions. Almost think of it as a broker is trying to find every red flag in you. And so, he's going to test you. He's going to ask you questions, not because he doesn't know the answer. He's trying to figure out if you know what you're talking about. Don't rush it on this one. Educate yourself so that you know what you're talking about. Once you do, then start building the relationship.
What do you guys look for when selecting a market? Are you guys just looking for the deal, or are you guys looking for certain population, certain demographics?
So because our model is a little bit niche, we need a little bit more to line up. But yeah, it's like, dude, we want to see a certain median income. We want to see job growth. We want to see, the major employers of that area. We don't want to see risks that they're going to go away. And we typically look for areas that, how could I say it? Certain areas respond differently to downturns, right? You have your coastal markets, you have a ton of equity, they don't cash flow for crap. Then you have your markets like, everybody's hot on Memphis right now because it cash flows like crazy, but there's like no appreciation in it. Then you have your like markets in the middle. We don't typically want to go too far into like some secondary, but we kind of want to stay into those like, yeah, exactly. But I would say most of the key metrics we want to see with storage, we need demand. That's a real easy asset class to be oversaturated. When we're looking at an area, we want to make sure that all the storage units around us aren't at 80% Yeah, exactly right. Yeah.
I make sure that they're at capacity and that there's a shortage for that. This is something that I started doing recently too, Mikey. Before this, I did very little social media before this year. And then recently I started focusing a lot more on it. Obviously, that's how we connected. I'm a fan. I see that you've got a good fan base as well. Why did you get into it? Has it helped your business? And would you recommend for other people to get involved with it?
The quick answer is yes, absolutely yes. And everybody has to do it. How I made my way into it, it was when I was still skateboarding. And all of the exposure that I could get was through my sponsors. My sponsors would put an ad of me in the magazine. That's how people saw me. That was it. So again, they had all the control. When social media hit, it was like, holy crap, I could put my content out every single day. When we did St. Archer, which is the craft brewery, when we launched it through Instagram. And this was 2012. There was no like ambassadors or influencer marketing. And in my perspective, that was one of the major game changers that made us the fastest growing brewery in California and then led to an exit 3.5 years later. It was huge. That was good for me because I realized the true potential and true worth to having a social footprint. And then it was like, okay, I will never let this go. I just wanted to find the next industry that I can implement that type of strategy. When I went into real estate, it was very similar to what we saw in the beer industry. No one really built a brand in craft beer at that time. It was all product sales, right? So like most breweries would infuse, some fruit or have some specialty hops, and that component of the beer would be what sold the product. We went in through like brand mode. Like, how do I sell an experience? How do I sell a vibe? When somebody drinks my beer, How do they feel something like they're, incorporated with our community? And there was so much success there that I went, okay, real estate is very similar. Real estate's stale. It's not very youthful. It's not trendy. It's all the same bland stuff. And so I wanted to get on social media and try to change how people perceived it, because in my perspective, that was opportunity. This has been our experience from doing so, because it's been 6 years now. Deal flow from brokers come through DMs. Like, I've had relationships with them for 10 years, don't know them. So that's a huge part, right? Investors come in through social media. Lenders come in through social media. It is a freaking lead magnet, 100%. And then I would say the last part, now that we have so many investors, it's easy for us to continue being in front of them and, building trust through social media as well, because it's really easy for you to get stuck in like the day-to-day grind of the business. And before you know it, your only communication with investors is once a quarter. But if you can get investors to follow you on social, they see you every day. They know what's going on, and it's easier to keep people up to speed and really part of what you're building.
What about struggles, Mikey? I know that we haven't really talked about that. Either struggles in skateboarding, or struggles starting up the company, or struggles with the beer company, real estate. Tell us about a time where things weren't on the up and up and you struggled a little bit, and kind of some of the lessons behind that.
Pick your poison, because the struggle will always be there.
Let's talk about skateboarding, then real estate, and then maybe family at the end as well too, because I know managing a business and also having a family, I know that can be challenging.
Skateboarding, I would say the biggest challenge I had in skateboarding was, I would say one of the biggest challenges I had was I was really concerned about what my peers thought of me. I put their approval above all, and that was actually really limiting. It took me a while to realize that, and then be comfortable stepping out and doing my own thing. So that was a challenge of skateboarding. Two, I would say connecting beyond your craft, right? Like, the reason I say that, when I was skateboarding, all of my focus went towards me being the best skateboarder. How do I give them the best finished product of the trick I landed? There was a big shift that happened when I realized, and it was from my wife, that people don't connect with perfection. They don't. People connect with a struggle or some type of situation that reminds them of themselves. So halfway through my career, I started putting out these shows, basically these like daily vlogs. And I showed what my normal struggle looked like to get a trick, which was I would try a trick for 2 hours to land at one time. And the shit that would come out of my mouth when I was struggling was funny. What happened is people started looking at me and going, holy crap, Mikey's a professional skateboarder and he struggles to get a trick just like I do. And people started like connecting with me beyond like they did 7 to 8 years prior. And then my career started booming. Bring people in, no matter what stage you're at, the return on that is going to be 10x. Gosh, real estate, biggest challenge with real estate. I think follow-up. I think that's one that we are better at lead generation than, in my perspective, where we need to be on follow-up. And when you're raising capital or you're closing on to whatever it is, the money is in the follow-up. That's where the magic's made. I think there we have an opportunity to get better at. What else? I would say raising capital. The reason I say this, we can only raise capital from accredited investors. On social media, the majority of my following is not accredited. So I don't know if this is a challenge. It's just something I want to change. Most of the people that I want to be able to participate with us can't. And so we are working on a new offering that is going to allow that. But that has been a challenge for me for the last 5 years. Like, I don't like the idea that only a certain amount of people can invest. I want all. So we've been working on that for a while. Q1 is when we're trying to launch it. So I'm looking forward to that, but that's been a challenge as well. And then I think lastly, in real estate, deal flow is just, even with COVID, deal flow is hard. It is hard to find deals. We kiss a lot of frogs, but I think that's just part of the business, especially in this time of the market.
What about a struggle like not balancing it? What about business and family? Like, any tips and tricks for our entrepreneur people that are running family and business as to how to balance it out, or how to make sure that you're not that person that has a really successful business, but then your kids don't ever want to see you?
That's how I attacked skateboarding. It was put all of my energy towards skateboarding. Skateboarding came first, and everything else was a far, far second. And that included my wife and my kids. I had a great skate career. When my skate career ended, my marriage almost ended, and my relationship with my kids was not good. And it was a good realization for me. Why am I doing these things, right? Like, I could tell myself I'm doing it for my family, but if I have no relationship with my family, am I really doing it for them? It was actually me. I was doing it for me, right? And so I had this moment in my life when I was 34, when skateboarding ended, where I got to basically reevaluate what was important to me. It was really good because what is important for me is to succeed at every aspect of life, not just one. I want to succeed with my wife, with my kids, my faith, with my friends, with business, with health, etc. And so with this business, real estate, this is the first business I've built with my family in mind. And you have to work smarter, but the return is so much bigger. Some of the things I've done to improve this, when I'm making decisions, I tell my wife about them now. Prior to this business, I would make the decisions, especially investment wise. And my wife was just along for the ride. Now, anything we do financially, I bring it up to her. I want her perspective and I want her to know what's going on. I include her on things going on with the business. Babe, this is what we're doing this month. These are my concerns. What are your thoughts, right? Making her feel like she's part of the business. When I come home, the phone, and this is my struggle. It's easy for me to be on this thing 24/7 because I'm an addictive personality and a workaholic, right? Yeah. For dinner now, the phone goes down. When I'm at dinner, phone is down. All of my attention is on the kids. And I'm trying to get to this point where from 6 to 8, 8:30, no phone. That's been really rewarding, is just putting it down, setting boundaries. This is something I had to learn. When people would email me, text me, especially when it had something to do with business, I would respond right away. I do not do that now. There's a hierarchy here, right? Family is at the peak, and then anyone else, I will respond during certain times. And that's actually been pretty impactful as well.
Anything else that you like for our viewers to know? And then lastly, where could people go to follow you as well?
Are most of the viewers in real estate?
Yes. Yes, correct.
What I would say about real estate, what's really important, if you're not in real estate yet, don't get frustrated. Just set the goal and start tracking your process to get to that goal. Hold yourself accountable to get there. Once you're there, then it just starts to begin, but you still have a long road to get here. So long-term mentality. 2, don't let your emotions get in the way, especially now. If you're buying a home, an apartment, a storage unit, there are so many offers on this thing that it makes it feel like you're never going to get in. And once you have that emotional energy, you start making decisions that are poor decisions. Don't do that. Always put the numbers first. And 3rd, I would say there will always be cycles, right? Real estate will come down. It does. It forever does. So when you're buying projects, have that in mind that there can be and will be, you just don't know the time. So when you're running your numbers, include that in there. If you're projecting a 4.5% exit cap, underwrite it to a 5 or 5.5, see if it makes sense. If your construction budget's $1 million, put 300 extra grand in there and test it out. If your rents are $2,000 for a 1-1, what does the deal look like if you only get 1,700? Put all of these stress tested models into the equation. And then if the deal makes sense, do the deal. Do not do a deal that only works if everything goes right. That's not reality. It doesn't work that way.
And then where could people go to find you?
Any social media. You can put in Mikey Taylor. I'll pop up. So you can find me, just hit my name as the search.
Well, I've enjoyed our time together. I want to say thank you again for taking the time to share as much as you can. For our viewers, this was episode number 94 of the Morales Group Show. If you've enjoyed the episode, make sure to hit that subscribe button. If you feel that maybe a friend would find value in today's interview, make sure to hit the share button. Once again, Mikey, thank you. And we appreciate you coming on.
Thanks, big dog. I appreciate it.